All right, bull runners, welcome back to the channel. So we just passed 300,000 subscribers. I want to take the time to say how much I appreciate you guys for watching these videos. If you haven't subscribed yet, hit the subscribe button, hit the like button. We have a special video for you guys today talking about what's going on in the crypto market right now with Bitcoin sitting at $43,500, Ethereum at $2,185, XRP 61 cents. We see Avalanche $42, Solana, it's moving, $80, it's up 13% in the past week. So the markets have been doing very, very well this year. You know, Bitcoin rallying all the way from $15,500 to, over 40, 44, almost 45K. We're going to be discussing what's taking place on the chart right now, comparing to what happened when the first gold ETF was approved, what's happening with Bitcoin and what could take place for the high of the year, and when we could see a correction, how deep that correction could go, some bullish and bearish divergences on the chart, and then comparing to the past cycles in when Bitcoin's halving is coming up next and what you could do to prepare. So this is going to be an amazing video. I know you're going to love it. You're going to learn a lot. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the like button, taking the putter, sinking the putt, give it a tippity tapperoo. As always, you know who we're doing it for. We're doing it for grandma so we can beat the SEC and buy her house back with crypto. Let's run it. All right, bull runners, welcome back. So let's dive right in. The market cap right now is at $1.62 trillion and over 2 million cryptos on CoinMarketCap. There's a lot of cryptos, a lot of altcoins. A lot of people wonder which altcoin should they buy now? What's the best crypto to buy now? Now, more important than what should you buy now is when should you buy, when should you sell, when should you hold, and what's the best strategy so you don't get wrecked? Because the fear and greed index is at 71%. 71 out of 100. We're in greed right now. And so it's a lot riskier to be entering into the markets the closer we get to extreme greed. And it's a lot better to be entering the markets when we're in fear on the macro. But the thing is, when we sit for periods of months in greed and you just see the charts go higher and higher and higher, then FOMO creeps in and you start buying in at the top, and then corrections take place and you get wrecked. And so what we're going to look at right now is a likely scenario for Bitcoin to take place, how to prepare. We're going to look at how long a correction usually takes in these markets based on the past bull run cycles and the best times to be entering and exiting the market. So again, it's not financial advice, no investing advice, all educational purposes only, all example purposes only. What you choose to do is up to you. And by liking these videos, you're okay with getting wrecked. All right. So looking at Bitcoin right here, if we draw the Fibonacci retracement from the high to the low, we are right around a 50% retracement, getting upwards of a 618. And I'll talk about why a 618 is kind of this golden pocket right here. This zone right here is this whole golden pocket of, Bitcoin before correction could be coming in. And I'll be discussing what that correction is going to look like. Now let's look at the open interest, because as you can see on the higher scale of things, this is how much leverage is on the market. If you guys watched the video yesterday, I talked about this with XRP, and in order to understand what's going to happen with XRP, we need to know what's going to happen with Bitcoin, and then all altcoins basically follow Bitcoin. So, if you want me to talk about altcoins and you're like, quit talking about Bitcoin, the more you know about this, you can get wealthy with any altcoin project that you want because they simply follow what Bitcoin's doing next. Now, in terms of the interest, you see we're at 4.05 billion. Now on the overly leveraged area is roughly 4.5 to 4.6 billion. And as you can see, each time that we've gotten up here, we've seen massive corrections take place, where Bitcoin fell off a shelf back in March of 2022. You saw it drop again when we got back up here again at this period before it fell off the shelf for the low. We saw Bitcoin rally up to $4 to $4.5 billion in leverage trading, then it gets wiped off the shelf. So these massive red candles is not mom and pop, grandma, grandpa, cousin and cousin, or the homeless dude down the street, throwing $100 into Bitcoin expecting to get wealthy. This is massive institutional dumps and exchange dumps from these centralized exchanges, where once the leverage gets up there, it wipes the leverage off the table and then it starts building again. So you can see this rising support on the leverage, and what happens there is we see a break of structure, a massive dump off, and we see a fall off a shelf. And this is where, like companies shut down, it scares people out, but then the whales that like Coinbase, Binance, KuCoin, MEXC, Kraken, whatever exchanges, they dump off a large chunk and it liquidates the leverage traders. So it liquidates the people that are longing the market. So for example, a lot of people were longing the market right here, thinking that Bitcoin was just gonna do this. It was gonna go up. So the markets like to move to pain first, max pain first. So as you can see right here, we broke this ascending support on leverage and we saw a massive red candle take place where it wiped the leverage traders off, and then Bitcoin rallied from September and October, leading into the ETF news. Now I'm going to discuss the ETF news and when that's happening, but what we're seeing right here, we see an ascending support line right here in leverage. So what I'm going to expect, I'll give you my prediction and what I'm doing, because I'm not buying Bitcoin right now. I sold a good chunk of my Bitcoin. We could push higher, leading up to $4.5 billion in leverage, but eventually I would expect a break to the downside in leverage and for leverage to get wiped off of the table, leading into Bitcoin's halving and a correction to take place for Bitcoin. Now I'm going to explain my logic here, and then where we bottom out at could be 2.7 billion, 2.5 billion, $3 billion in leverage, and then we start building back up again going into 2025. Now, good news and bad news, okay? I'll bring you both in this video because the good news is the ETF's coming. November 18th, 2004, the gold-backed exchange-traded fund ETF debuted on the New York Stock Exchange. November 18th, 2004, SPDR Gold shares, or GLD, saw inflows over $1 billion in the first few days. Seems like a lot of money, right? Over $1 billion. This is the chart of gold back then. And so as you can see right here, gold was around $372 per ounce back in May of 2004. And for 192 days, 6.4 months, gold saw a rally before the first gold ETF was approved of about 19, almost 20%, pretty much 20%. So for 192 days, what were people doing? This is exactly what's happening with Bitcoin. They were buying the rumors. At that time, people are talking about ETFs coming. The word started to spread. An ETF could be approved for gold, just like what's happening with Bitcoin over the past 415 days, which is 13.83 months. Bitcoin's been bullish. Gold was bullish for 192 days, 6.4 months. ETF was approved for gold, then over $1 billion in inflow, and then we saw gold rally another 3.5%. Then it topped out at $457 per ounce, only 18 days after the ETF was approved. Surely that goes contrary to what people believed or thought was going to happen, right? But like I said, markets move to max pain and they wreck people. And so if you're not prepared for this, you get wrecked because you're going to be hopiumed into the markets, around ETF time, and you're going to be the exit liquidity for a lot of these institutions that have been in the market for the past, 13.83 months, 415 days from Bitcoin's bottom. The whales, Blackrock, Fidelity, you got Van Eck, you got ARK. They've been entering the markets, guys, since November of 2022. Why would they be entering the markets now? The wealthy get wealthier by buying early and selling on retail. So what happened here? That's exactly what happened with gold. So gold went from $440 an ounce. ETF was approved. There was 18 days of hopium, hype, excitement, 4% rally. Then what happened there? Well, after a little over 2 weeks, the excitement died off. People started to find a new narrative to talk about in the markets. We can get into the chart of silver and other commodities like oil and stuff in another video. But point being, the hype died off. Then what happened there is gold saw a sell-off over the course of 64 days of 10%. It dropped all the way back down here to October of 2004, pre-ETF. So the first ever ETF was approved, and the price is now lower than the price it was approved at. So you see these massive red candles. You see this massive red candle right here that brought gold from $450 an ounce down to $431. What was this? This wasn't retail money. This was some VCs or institutions dumping. When you see a massive red candle in one day, it's massive leverage traders getting wiped off the table. Now, interestingly enough, we saw this ascending support on the RSI, and we also saw higher highs happening on the resistance right here. But we saw a break of structure right here for this red candle, and then momentum was in favor of the bears. We stayed down here below 50 on the RSI for an extended period of time until February 5th when we saw gold rally. Now it took 287 days, 9.57 months for the price to pass that high again, and then Then we saw gold go on a massive bull run upwards of $728. So for 287 days, people had to wait that bought up here 18 days after the ETF. The retail money was coming in. News was popping out all over Google, social media sites. People are talking about it. You have to get some gold. They were going down to the store. They were buying gold. And the price of gold was going up because in-person stores that were selling the physical bullion and the coins and the rounds and all that stuff, they were charging a premium for it. The premium was high. People were paying these exorbitant premiums on like golden eagles or buffaloes or whatever you were buying at the time, or Canadian maple leaves. And then all of a sudden, boom, price sold down, consolidate sideways. Then we rallied out of that. Once the retail was out of the market, who bought in here? Who bought in right here? The same institutions that bought in right here. It was the same companies, the same VCs, the same investors that were buying early. Retail's getting in late. They're selling on retail at the top. Retail's getting out, and then they're buying back in on the dip. That's what's happening. And so with Bitcoin, there's a lot on this chart we need to look at right here. Okay, there's a few things coming up, and we're going to talk about divergences as well too. So I want to go step by step with you guys. So what happened here? Bitcoin bottomed out, in November of 2022. Then Bitcoin started the first leg up of the bull run, going from 15K upwards of, 30K, and then consolidating for an extended period of time. But for 415 days leading into Bitcoin's ETF approval potentially happening, let's say the ETF approval happens January 10th, okay? We'll set a date because between January 5th, January 10th, let's say the ETF gets approved anywhere between the 5th and the 10th. The 10th would be 415 days of a bull market, which is 13.83 months. Now, if you've been around crypto long enough, you know that the markets aren't just gonna keep going up forever. We have months and periods of time where we have bullish price action, then we have months of bearish price action consolidation periods. Just like gold, 6.4 months, bullish price action, 9.57 months consolidation period, and then how many months do we have of a sell-off? It was 2 months, right? 2 months sell-off, then consolidation sideways, then we rally out of there. And so for Bitcoin, what I'm expecting to happen is something like this on the chart, where we rally up into the halving, we rally up into the ETF approvals, and then the ETFs get approved on or around January 5th, January 10th, and that creates a little more buzz. The markets rally a little bit higher, and we're looking at the golden pocket of the 618 retracement right here, and we see a higher high on the price chart, and then I'm going to be looking for a lower high on the RSI, which would be a bearish divergence that I'm going to explain in a little bit, and I'll explain bullish divergences. And so then I would expect there to be a sell-off taking place, bringing Bitcoin back down to potentially 30K. We'll see how low Bitcoin drops. And also, we'll also see how high Bitcoin goes. This doesn't mean this is going to play out exactly like this. We could see Bitcoin go crazy into the ETFs and rally up to 56K, 57, 60, 70K. We don't know, okay? We have no idea how high Bitcoin will go, but the momentum is in favor of the bulls right now leading up to the ETF approval, because there's that mystery on the table of, and Bloomberg is saying things like 90% approval odds, right? So that's why we're in greed still, is because of this ETF news. And Blackrock pulls some weight, and Blackrock controls the media. And so leading into this, we push higher. We push up to a 618, a 702, a 786. Depending on how high we go, we see a higher high on the price chart. Now, what's interesting though is we already saw like an 87 on the RSI right here. So the chance of the RSI, which is the relative strength index that shows the momentum at which the price action goes up or down, it flew all the way from down here of like 40 something all the way upwards of 88. And so what I'm going to be watching for is a bearish divergence to take place of a lower high. So as you guys can see, this bullish divergence take place. For those of you that are wondering, what is a divergence? Well, a divergence, it simply means to deviate from or do something distinctive from what another entity is doing. So the definition should provide a clue as to what a divergent setup is. So this is known in like Forex trading, but for example, there's certain oscillators you can use, like a relative strength index or a moving average convergence divergence, to find certain divergences. And so, what is a divergence? It's a situation where price candles, tops or bottoms, point in a different direction from the corresponding tops or bottoms of the indicator's signal line. It's called a divergence, right? So it can either be bullish or bearish. So for example, a bullish divergence, if the price chart is showing a bullish divergence, it's characterized by the formation of progressively lower lows on the price chart, by the price candles when the signal line on the oscillator forms progressively higher lows. So as you can see right here on the relative strength index, we're seeing a higher low on the support, whereas on the price chart, we're seeing a lower low. So this is a bullish divergence. And so what would be an example of a bullish divergence? Well, back here, when Bitcoin was at $17,600, we saw fall off the shelf right here. This was like June. So one of these companies like FTX or something was shutting down at this point. I don't remember what was happening here, but it was like Celsius, Luna Collapse, FTX, some company there caused this massive red candle and panic. And so then we saw a massive wick down here, a rally up, and then we saw a lower low on the price chart. But when you look at the RSI was down here below 30. The RSI rallied up and the RSI dropped again, but we saw a higher low on the RSI. So the relative strength index was trending upwards on the support, whereas the support for the price chart up here for what the price action is was showing a lower low. So that's called a bullish divergence. Now, when we talk about what a bearish divergence is, you guessed it, the opposite. So the RSI can be used to spot this, where we see, for example, like a higher high on the price chart, whereas we see a lower high on the price chart. So let me give you an example of what I'm looking for right here, and then I'll show you what happened in the past. So like this video if you guys appreciate stuff like this. All right. So we're looking right here, leading into the ETF potential approval January 10th. Now, because we saw such a massive rally up recently from 25, 26K for Bitcoin upwards of 45K, the RSI spiked well above 70. And as you know, anything above 70 on the RSI means overbought. It means it's riskier to be getting in above 70 than it is below 30. If it's below 30, better time to buy. If it's above 70, better time to sell. Very simple, right? So because we saw a peak upwards of 88, historically, that's a good time to be selling because the RSI is in overbought conditions. Now, because we drastically shot up here, what I'm looking for is with Bitcoin rallying into the ETF, I'm going to be watching the RSI to see if the RSI doesn't quite make it up to 88. If the RSI doesn't quite make it up to 88 and we're pushing higher, then this would be a potential bearish divergence, meaning we would see a higher high on the price chart where the high pushes up to a 618, which would be roughly $48,000-ish, like $48,800 something dollars. And we could see a lower high on the actual RSI. And so if we were to see a lower high on the RSI and we get rejected and we start trading down from the 618, then that would signal to me that we are going to see a massive correction take place to the downside for Bitcoin to come to this upward trending support line right here that it's been trading alongside. As you can see right here, where this bullish divergence, was happening, we saw a higher high on the RSI and we saw a rejection right here, on the support, the ascending support, but also on the RSI, we saw a bounce off of that. Now we did see a break below structure right here for this fake out where people thought Bitcoin was going to go down further. People thought Bitcoin was going to go to 22K, whereas this was a massive liquidation event as well too. Fake out to the downside, break of structure, then it goes back above, retest this upward trending support, and then bounces off of it to go into overbought conditions up here. And so this ascending support is what we're watching right here. You see this yellow line right next to the ETF approval right here, this yellow line that I'm looking at right here that's going up. So this line right here is what we need to watch as support. So if we see Bitcoin push higher and see a sell-off and hold support, I would expect it to break to the downside. If we see a break to the downside, then and we see the RSI forming lower highs, bearish divergence would be confirmed, and then I would expect a crash going into Bitcoin's halving, consolidation sideways, similar to what happened with gold during this period right here. And then how long, the real question would be, is if this takes place based on what I'm expecting, because I'm just going to share with you guys the good, the bad, the ugly, and the great, right? So if this happens, how long would it take for Bitcoin to pass the high of this year or January if we top out before January or during January? So it'd be 3.8 months from January 10th until Bitcoin's halving, 3.8 months. So gold's correction was roughly 2 months from this high to here, but from the actual ETF approval, it was 83 days, right? So it doesn't mean it's going to play out like that. But if we were to see, from an ETF approval of January 10th for Bitcoin, if we were to see a 60-day correction, that would be March of 2024, if we were to see like a 108-day correction going into Bitcoin's halving, that'd be 114 days. So somewhere, on or before Bitcoin's halving, I would expect the bottom to be in. Now, where that bottom would be, a lot of people are calling for 30K Bitcoin because we stayed within this range right here from 31K until here for almost 200 days, a little over 200 days if you're counting this period right here from the breakout. It's been like 219, 220 days. So the longer the consolidation range in a breakout, the likelihood of a back test of the top of that range, which is resistance, right, as support, is a lot more likely. So for example, if I were to draw a horizontal ray right here, we're watching this right here as a bounce for support. And so where the RSI will be at that time for that bounce, it could be 57. It could be another, event where it drops below this ascending support on the RSI, and where we're seeing higher lows take place. And then we see, a lower low take place. So we could do something like that. And then we see some type of reversal on the RSI take place, followed by consolidation period. Then we'll figure out what happens on the RSI over the next few months. But after Bitcoin's halving, how long would it take before Bitcoin rallies past the high of this year or January before we pass the all-time high? So what we need to look at there is we need to look at what happened in the past, okay? And so in order to understand this, we look at what happened in 2019 and 2020. So from the high of $19,700 to the low of 3,100, we saw a 618 retracement. So we saw a bearish divergence take place on the chart. Similar to what I was talking about right here, about a lower high on the RSI, whereas we're looking for a higher high on the price chart. That's what happened right here. We saw Bitcoin go from $8,200 and the RSI was at 88. So to go from 88 even higher, it's a lot harder to get the momentum to go up higher, because the higher you go, the more pressure you have pushing you down, right? The more sell pressure you're going to have. And so the lower that you are, the more buy pressure that you're going to have. As you can see on the RSI, we saw this double bottom trend reversal all the way down here. The RSI was well below 30, and that was the bottom for Bitcoin. So if you just look at the RSI, this tells you enough of what you need to know. So we pushed upwards of 88 on the RSI. Bitcoin was at $8,000. And then we saw it push up to $9,000. Interestingly enough, we saw a lower high on the RSI of 78. And then Bitcoin pushed even higher, upwards of a 618 retracement to $13,000. And we saw a lower high on the RSI, bearish divergence. That simply means there's going to be a reversal, a correction happening. And so then we saw a break of structure of this ascending support right here, right? We broke it. This was too steep. Just as quickly as it comes up, it can come back down. Then we saw the RSI come all the way back down, form a support down here, bounce off of the support, another rally up, then black swan event, bring it below the RSI, liquidate a lot of people that were longing the markets right here, thinking that Bitcoin was going to go up, right? Long in the market. So it's a game versus the whales, right? The whales are playing a game to get money from the retail and fake out retail. So this was a good fake out right here. People were exiting the market, panicking. Bitcoin dropped 60%, over 60% in just 3 weeks during COVID, and then it bounced out of here. And then we saw the RSI just kind of trending along this upward trending support right here. As you guys can see, it bounced off of it. And then we got into, overbought conditions when we rallied out. But Bitcoin's halving took place, and we crashed into Bitcoin's halving. And then it took 167 days, 5.57 months to basically break out, right? Break out and pass the 618 retracement high right here. So 5.57 months. Now looking here, how long did it take until after Bitcoin's halving? 167 days, 5.57 months, almost the exact same time. Very interesting how that played out after Bitcoin's halving. So 167 days, what would that be? Well, that would be roughly around October 18th of 2024 before a massive Bitcoin breakout and breaking the high of this year or of 2024. And so I'll be sharing with you guys how you make money during a period like this and what you should be focusing on while the markets are going down, because that's not a buyer's market, that's a shorting market. People that short the market if you're doing leverage trading, and that's also a good time to be focusing on creating passive income for yourself. So actually real quick, if you guys want to discover, if you're a business owner or you want to help business owners, how you can be able to create passive income, and if you have a business, how you are losing $700 to $800 per employee on payroll, and how you can be able to save that much per year and also help your employees generate an extra 4 to 6% on their paychecks at no cost. I'll be sharing this at the end of the video so you guys can check this out. So hang tight for that, because it's a great way to be able to, save money as a business owner and help businesses to make money to create passive income. But looking right here, based on what's going to happen with Bitcoin, yes, we saw a bearish divergence in 2019 leading into 2020, and then 167 days after the halving for it to break out. Back in 2016, Bitcoin pulled the 618 retracement. We saw a sell-off going into Bitcoin's halving, consolidation for 168 days, 5.6 months, and then we broke the high of the 618 retracement. And so we saw this upward trending support on the RSI. We saw a fake out break of structure right here, crashing into Bitcoin's halving, and then we saw the RSI see a reversal right here. And so breaking of a structure of an ascending support on the RSI, we saw that take place back here in August of 2023, trending upwards. I would expect another break of structure of another fake out going into the halving, consolidate sideways, and then to break out of here. And so what would cause this? What would cause a sell-off? Well, it would be institutions, it would be exchanges selling on retail to then drop the price lower to shake people out to be able to get a better deal for corrective wave number 2 in the Elliott wave theory that I talked about yesterday. Because how these markets work is based on macro and micro Elliott waves. And so what we're forming right now is we're forming macro wave number 1 leading into corrective wave number 2 before we go into wave number 3 leading into 2025. And then we would see, Bitcoin most likely pass its all-time high, maybe go upwards of 70, 80K, see a bigger correction, and then we could potentially see some type of blow off top for wave number 5, and then come down to the ABC corrective waves into 2026. And so wave number 3 is the most impulsive. The best time to be entering the market was obviously, at the low down here before we saw wave number 1 start. But the second best time is wave number 2, when this corrective wave is in. You're gonna most likely, no guarantees here, but have a few months to be able to accumulate the dip, down at 30K, 32, 33K. If Bitcoin pushes higher, Bitcoin goes to 58K, that dip might bring it down to 35, 40K. We don't know, but we do know that a dip will eventually be coming for Bitcoin. We just don't know when or how deep it will be. We can just get an idea based on the past and have a good diversification and hedging strategy, because you want to be, hedging on the way up, and also, knowing how to sell on the way down as well too, and then knowing when to hold. And so a 618 retracement happened the last 2 bull run cycles. And when we look at the Bitcoin stock to flow model, which shows days until the next halving, and the color, I showed this in some previous videos for you guys on where we are right now. We're at dark blue, getting ready to turn purple, getting closer to the halving, and the halving's coming up, in roughly May, beginning of May, end of April of 2024. And so when we look at what happened during the last halving, we saw when Bitcoin went from dark blue to purple, it rallied going into purple, and then it crashed around purple, right, leading into the halving. And then once it turned red, we saw consolidation going into orange, then we rally out of there. The cycle before then, from dark blue to purple, we rallied going into purple, sold off in purple, and then from red to orange, consolidation, and then orange was the rally. The cycle before then, from dark blue to purple, we rallied into purple. We saw a sell-off, consolidation around purple, from red, consolidation, orange, rally. And so where are we right now? We're at dark blue going into purple, rally into purple, sell-off, consolidation into red, then from red to orange, we rally. So how high will we go for this next rally into purple? It's anyone's guess. 48K, 50K, 55K. I don't think Bitcoin's going to pass its all-time high, although I could be wrong with this rally into purple leading into the halving. But one thing's for certain is every single bull run before this, we saw a sell-off in purple after we rallied into purple, and then a sell-off into dark purple before going to red. So that's what I'm expecting, upwards of 50, 48, 50, 55, maybe up to 60K max for the blow off top for this bull run cycle, and then a sell-off going into 2024 in February, March, and April. Bitcoin halves, and then we consolidate, and then it takes, how long did it take before we took off out of there? 167 days from May of 2020 until October of 2020. How long did it take before then? From the halving of July of 2016, it took until December of 2016. So similar time frame, right? October, December. And so what would that look like for Bitcoin now? Well, that would be October of 2024. Then we start going again. So you have, months all through 2024. You pretty much have all of 2024 to accumulate. We had all of 2023 to see massive bullish price action. So 2024 most likely will be dominated by bearish price action, which is bad news for people that are buying right now, because just like what happened to gold, where we had another 5% push to the upside, like you're not going to create generational wealth in Bitcoin buying right now if we see a deeper 20, 30, or 40% correction. Just like if you bought gold right here, you weren't creating generational wealth, and having to wait 287 days unless you just held for a long period of time. So the good news is that on the macro, we went up massively after that 168-day consolidation period. You just had to be patient. Same thing right here. After 167 days, even if you bought the top of the higher high right here of $13,000, you were still up, over what, like 3 to 5x on your Bitcoin if you just held it long term. But you would have had to wait. You'd had to wait 497 days before you even were at a break even, right? Before you had a break even, waiting 497 days. But if you just held for 869 days, you'd have been up a 4x, right? So it's not the best time to be buying right now. And that's fine. It's okay. But what should you be doing? You should be focusing on creating passive income right now to be able to accumulate this dip that's coming up. Because when this dip happens, not if, but when and how low it will go, you'll be ready by having income come in on the front end, by helping business owners. And if you're a business owner, you'll be able to save money through this program that we're sharing with you right here by going to bullrunners.com, clicking the link on the page, put in your best email address, and you'll be able to watch this video on the other side that will explain everything. You'll be able to apply for a call. It'll explain how it all works, and you can go through the entire process, and we'll be able to plug you in with our Telegram group as well too. So go ahead and check that out right now, guys. I will see you on the next video. You know what we're doing. We're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain tech, distributed ledger technology, and cryptocurrencies are going up in interest over time. That's the truth. And together, we're all going camping on the beaches of the moon. I'll see you on the next video. I'll see you on bullrunners.com. As always, you know what to do. Stay bullish.